Hi, everyone, and welcome to another episode of The Era of AI. I'm Anthony Pastore. My guest today is Julia Hermann, Global Market Strategist at New York Life Investments. And our conversation today is going to take us beyond the headlines and into the engine room of the AI revolution. Quite literally, what we're talking about here is what's powering AI and where is that power going to come from. We know that energy demands of AI data centers rival those of some entire countries, which can lead to infrastructure, utilities, and even nuclear power becoming critical to the future of technology. So Julia, with that in mind, one of the previous episodes that we did for this series a few months ago, we talked about AI and we talked about its interaction with infrastructure and energy. But the thing about AI that we've learned, and I know you're talking about this too, is it changes all the time, exponentially even, when it comes to especially the story of energy usage. So tell us a little bit more about this evolution and what you're looking at when you're taking a look at all the data that's in front of you.
Sure. Well, thank you so much for having me, Anthony. And the evolution we're seeing happening is that it's happening live in real time. We are seeing actual investments following all these expectations around AI and digital infrastructure. In this sense, AI and digital infrastructure as a long-term investment theme is so unique because it's been delivering investors instant gratification. And that's not just on the equity side of the story in the Magnificent Seven. We've also been seeing it on the infrastructure rollout. We are seeing major tech companies shoring up their own access to electric utilities so that they will be able to run their data centers. We are seeing continued national level investment in this theme. And so we aren't having to wait 10 years to see returns on investments and see this theme come to fruition.
Every time I hear something 10 years when it comes to artificial intelligence, the next week an article comes out and says, no, now it's 8, now it's 4, now it's 2. Everything just seems to be growing so fast. And obviously, the whole issue that's happening is how do we power these data centers that are requiring more and more power every day? So how does AI, if you look at it from your perspective as a global market strategist, you look at infrastructure, you look at energy, what makes this combination really so attractive? I mean, it seems almost obvious because we're just building and creating more opportunity.
Right, and I think what was initially attractive to myself and so many investors was just how much infrastructure AI is going to need, how much power AI is going to require. But here's the thing, just because a wave of innovation needs a lot of infrastructure doesn't mean it's actually going to happen. Look at electric vehicles. That was a very slow infrastructure rollout. So for me, the conviction in digital infrastructure as an investment theme comes from actually looking at the last few hundred years of history in the US and seeing what makes an infrastructure rollout tick or not. I've found 3 key ingredients that any sort of innovation needs here. First is public participation. No one can spend at the scale of the government, particularly the US government. And of course, here we have things like the CHIPS and Science Act that have been supportive. But you also need the private sector to lead the execution of that infrastructure and to have full buy-in into the process. Obviously, that's the Magnificent Seven story. But there's also a bit of an X factor I've found that was present in railroads and internet and other big historic infrastructure waves, which is a sense that it applies to everyone. It's universally applicable. And in the case of AI, I think it's actually pretty quantifiable because we can see retail investor participation in the Magnificent Seven, institutional investor participation, the funneling of billions of dollars to those companies, which are then funneling billions of dollars to this infrastructure theme, to power generation, to utilities, to nuclear capacity, and even more.
Right. I mean, it's certainly one of the challenges is pretty much baked into what we're talking about. It seems like, you've got to build out this whole infrastructure. You've got to build out the energy. And interestingly, I know I mentioned it in my little intro there, that the International Energy Agency has estimated in 2024 that the global grid would need to add as much as the equivalent of Germany's annual electricity consumption. I mean, that's a staggering number. So lots of challenges in this particular story.
Yeah, it's my favorite stat on that too. It just boggles the mind every time I say it.
You have to really think about the size and scale of that, really.
Exactly.
Yeah.
And what's crazy about that stat is they're talking about adding that type of capacity, not in 2050, not in 2030, but by 2026. So when that report was published, we're talking about a 3-year timeline, right? So just astronomical. What I think that implies in terms of energy investment is that every country is going to have to be looking into all of its back pockets to source that type of power. It's going to mean traditional energy, it's going to mean renewables. You mentioned challenges though, and I do think a question mark in this journey might revolve around nuclear power.
Yeah, well, that's something that I think it always raises eyebrows whenever you say nuclear power. People automatically go to the horror stories, that have taken place in our lifetimes and beforehand. So just give us the 101 on nuclear energy today and why it's going to play such an important role in the evolution of AI.
Sure.
Because I think that's what most people are saying is like, do we really need that?
Sure. Well, in the US in particular, modular nuclear is sort of the great hope where you can power a specific data center with a modular nuclear power facility. That is particularly useful because we're starting to see some negative externalities of just what power monsters data centers are. There have been specific anecdotes I've been hearing, for example, in some places in Georgia, where a data center goes in and regular people's utility bills starts to skyrocket because it's just a ton of demand on a fixed supply. So modular nuclear could potentially be helpful for that. But there are questions about safety and technology that are still outstanding there. So then you think about traditional nuclear capacity. We have experienced in the US something called nuclear fade, which sounds scarier than it is.
Sounds like something you don't want to wake up to as a headline.
Right? Exactly. But all it means is that these nuclear power plants do not have an indefinite timeline. They do need to be decommissioned after a few decades. And on aggregate, as an economy, the US has not replaced those nuclear power plants. So the share of electricity that the United States generates over time that comes from nuclear has declined. It actually has offset the rise of renewables power in the US.
Right.
So we're not adding on aggregate to our utility capacity, and that's an area where that public-private partnership, I think, can hopefully be effective in the future.
So essentially, it looks like either private companies or the government is going to have to step in and start either retrofitting nuclear power facilities or creating new ones. Is that what I'm hearing? Is that how this works?
It could be the case. What we've seen so far is a sort of ad hoc approach where a major tech company will strike a partnership with a utility power or an existing nuclear power plant, and they will basically try to get that market share, which makes sense, right? But at scale, we haven't yet seen plans around this. We do know that the European Union's most recent spending plan toward AI includes an element of power capacity and infrastructure. So future spending plans will tell. Yeah,
exactly. And also like there are other energy sources out there. We know that electrification is something that people are talking about in the sense of, adding to, the grid by 2050. There's an expected 50% rise in electricity use, which has been pretty stagnant now since the 1960s. But, there are other, besides energy and besides infrastructure, I'm sure there are other areas. It almost seems now AI is not just a siloed story anymore. It almost impacts everything and every sector. So what other sectors, asset classes are you kind of looking at now as saying, you know what, these might be beneficiaries of this broader story of infrastructure and energy increased usage?
I think we can get a little bit more detailed and creative in our selection within materials, for example, and broader commodities as part of this broader trend.
And also what's interesting is we look even at some of the small and mid cap names, and there's so many AI adjacent companies in there. They may make one product or sell one thing, but it's an important component to the broader AI story. So it really is such a large base of industries and asset classes that are really touched by AI. So kind of, Julia, as we're kind of wrapping up, given the sort of scale and the resilience of this AI mega trend that we're talking about, do you see AI-related investments, I don't know, maybe kind of becoming a bit of an anchor, a new kind of anchor for portfolios, especially in the environment, and especially with what the expectations are within the next 10 years and less? Yes, AI can absolutely be an anchor point for a portfolio. And I'm having more and more conversations with investors about that, because these investors just want to not think about trade for a few minutes. They want to be able to think a little bit bigger, a little bit longer term right now. And this is such a unique opportunity where you have a diversified range of participation opportunities across asset classes, across sectors.
The other thing that I find really compelling about AI and digital infrastructure as a theme right now is the fact that it can be a bit above the cycle. We just mentioned utilities and materials and commodities. Utilities are a classically defensive sector, right? Materials and commodities are a classically more pro-cyclical sector, as would be energy. And so at a time where the economy is slowing, there's policy uncertainty, and in many ways, investors aren't sure which side of the positioning coin they should be on, more cyclical or defensive, AI can be an opportunity to pull up a bit.
Excellent. And anything we missed in this conversation, because I know it's very broad and there's so much nuance inside of this story and there's lots of layers of the onion if you keep peeling it back. What are some final thoughts you have for the audience on this broader story today?
Sure. Well, picking up on what you were saying about the supply chain of contributors to AI, I find that such an interesting opportunity because it can very well include many small caps. And at the same time, we see a lot of mentions of inorganic growth, acquisition, right? Where a company goes from being a small private player to suddenly this engine of growth in a large cap company. So I think we'll see a lot of dynamism on the equity side to come.
Well, Julia, thank you so much for coming by. Again, I think the story is an evolving one, and I feel like if you come back in 2 months, we could see different data or more information, but I'm really glad you were able to come by and tell us what was going on at this point in time. So again, thanks for coming and good to see you.
Thank you so much for having me.
Thank you, Julia Hermann from New York Life Investments, and thank you to our terrific partners at New York Life. And of course, if you'd like more information on anything we're talking about here at UBS related to artificial intelligence, we've got a terrific website, ubs.com/AI-hub. It's right there on your screen. Plus, you can follow UBS on social media. We're on all the major channels. You can also check us out on Instagram. Follow us at UBS Trending. Lots of UBS Studios content there for you. And as always, we encourage you to please, if you'd like, continue this conversation with your financial advisor. Until next time, from New York City, I'm Anthony Pastore. Have a great day, everyone. We'll see you soon.